What's up, guys? Welcome back to the channel. Today I want to go over another setup I took in the GBP GPY. Basically talking about why I took it, how I traded it, and hopefully you learned something from it. So let's get started. All right, so we are looking at the GBP GPY chart. Now, before we dive into my trade, I have to tell you that I was actually bullish on the GBP GPY. And the reason for that is we had these equal highs above market. So I was waiting for a long setup anywhere in this area. And also in this area to basically tag these equal highs because liquidity tends to work like a magnet, like I spoke about earlier, and price tends to move towards target, towards areas, I have to say, of liquidity. So I had a bullish bias. However, you have to be flexible in this game. And as soon as my setup popped up, I immediately switched to being bearish and to short. Now, I'm going to start by looking at the daily like we are now. And my mechanical setup triggered in this area. There are basically a few candles in this area. And if they happen in a certain order and with certain prices, then my mechanical rules line up and I go short in this case. It's completely mechanical, and I do add some context to allocate more risk because in certain scenarios, my mechanical strategy works better. And in that case, I want to be risking more. And that's what I also did in this setup. So I had a long bias, but as soon as my setup happened, I switched to short and I took a short. Now, before I dive into the confluences, I want to talk about the statistics. So I took a short at the red line in this area with a stop above that high, so the green line, and a target, the blue line. So it's a bit over a 1-to-1. However, if I go to my statistics and I look at my statistics, it tells me there's a 70% chance price tagging the blue line before taking out the green line. And even with a 1-to-1, that's going to make you a lot of money in the long run. So yes, I'm happy to take a trade with a 1-to-1. Yes, you don't need a 1-to-200 like people nowadays tell you to. This makes money in the long run. And that's what it's all about. It's a high win rate, so it's easier for your psychology. It gives me an edge. And that's my way of trading, and it's completely mechanical, so I don't have to think about it. I just have to wait until the rules align, then I take my short. So I went short at the red line. As you can see, price did move up a bit, but then fell down, and it hit my targets pretty quickly, which I didn't expect. I did expect a down move, but not as aggressive as this one. But there was a 70% chance of hitting target. So if I'm going to close this out, the reason for a short is number one, the mechanical setup, but we also had a distribution range. This is clear Wyckoff distribution. There was a lot of liquidity above these highs. You had a lot of equal highs here, and price went into it and immediately fell down. So that already told me something. And this correction was aggressive. We hadn't seen any type of strong correction like that before during this uptrend. Yes, we did see one here, but immediately it got bought up, and as soon as we made new highs, price went up. However, in this case, price went up again, took out this high, and then immediately fell down and broke structure, and that's something we didn't see here. So that confirms a distribution pattern to me. So if I'm going to label it, what this was your buying climax, aggressive buying, then a fall down, which means a change of character. There's something up here, aggressive selling above swing highs is generally a bigger player absorbing liquidity. And then again, as soon as we made a new high, immediately price started to fall down very aggressively. And again, we haven't seen this aggressive selling anywhere during this uptrend. So that tells me a lot. And I basically want to be short at that case, at that moment in time. So this was your UTAD in the Wyckoff method. Now, I always trade the breakout. To me, price had to break this area. It also lines up with my rules. And as soon as it closed through that area, which is the red line, around the red line, I took a short and my stop went above the green line. Now, why did it go above the green line? Generally speaking, if there is a big aggressive move like this one, let me change that color real quick to blue. Like this one, price tends to retrace it before falling down. Price tends to retrace aggressive moves that haven't been retraced yet and then fall down. So I don't want to be in the way of normal market behavior as I want to describe it. But I also don't want to be shorting, for example, up here. Because from backtesting and from trading this strategy for a long time, I know that if I wait for a retracement towards that area or towards this area, price tends to move without me towards my target and I don't get a fill on my limit. Now, in this case, if I would have put in a sell limit at this level, yes, I got a fill. But over the long run, I know that if I trade the breakout, I'm better off than if I wait for a retracement towards these areas that I just highlighted. So that's why I took a short there. And I know that a lot of people would trade like this, would trade the retest. And yes, that's a great area to look for a short. And maybe you can get a tighter stop. For example, if you waited for price to retest that area and then break structure here, you might have put the stop up there and maybe went short here and then target that area. Yes, your risk reward would have been better, but that's not my style. That's not my way of trading these setups. And it might work for you if you test for yourself and you find out that if you place a stop above here, you make more money in the long run. Great. But this is what works for me. This is what fits my personality. So that's what I do. And as you can see, it hit target. Now, I have to say the last few videos, I showed you a lot of trades and surprisingly, they all hit target. Now, I don't always win, but I am on a winning streak right now. And that's quite unusual. Usually my results are well distributed. But right now my win rate is at 74%. I can show you my trading journal for my separate account, because if you have been following my videos, you know that I created a separate account to build a record for you guys so that you guys know I am profitable and I'm not just a guru teaching my strategy that doesn't work, because that's what everyone seems to be doing nowadays. So this is my trading journal. I use Edgewonk, and as you can see, I'm up 18%. The account is €1,000. I just made a separate account because I don't want to really show what type of money I have. I like to keep things a bit more private. So I created this separate account for you guys. And this is also connected to my FX book, and the link will be on later this year because I've been trading this account for almost 2 months right now, which is too short in my opinion to basically call this a profitable track record. But as you can see, my win rate is 74% right now. I took 19 trades. My average win rate is between 60 and 65. So I am on a massive winning streak, and I do expect things to turn around and this number to decrease. As you can see, my equity curve looks really great, but I do expect some corrections in that equity curve. But yeah, that's why I showed you a lot of winning trades lately. Because I'm just on a winning streak, and of course it feels good to be on a winning streak, but it feels better that I haven't made any mistakes in these 19 trades. They have all been according to my rules, according to my plan, and that's really what counts, to stick to your rules, because I know I have an edge if I follow my rules. And if I keep trading like this with these numbers, and I simulate the equity curves over the longer term, you can see that I'm profitable. And it doesn't matter if it's a worst case scenario, if these numbers stay like this, then I'm still going to be profitable in the long run. And even if I change this to 60%, because my win rate is usually between 60, 65%, average win, average loss are almost the same. That can fit. It's usually a bit bigger, my average win than my average loss. But let's say I use these statistics, then in the long run, I'm still profitable with trading a 1-to-1 and a win rate of 60%. That's all you need, guys. That's really all you need. Just put the odds in your favor and stick to the plan. And that way you can just build wealth with trading. It doesn't have to be complicated. You don't need a risk to reward ratio of 1-to-200. That's just bullshit. Just get an edge, stick to the plan, and keep trading. And as you can see, I'm up around 18% in 2 months, risking around 1.5 to 2% a trade. So that's really, really decent. And as I said, it's just a separate account, but I'm trading the exact same way as I am on my regular account. So that's a bit more insight in my trading and explaining why I've been showing you a lot of winning trades. I don't always win. And this is also a bit of an insight in my trading journal. So like I said, my FX book is coming live later this year, probably. And then you can just see that I'm actually trading and that I'm not just a guru showing off and telling you I trade $1 million account and that I worked at some kind of secret bank for 20 years and learned all the secrets, which is not the case. I just studied a lot, learned a lot, tried a lot, tested a lot, and found my edge. And that's what I've been trading for the couple of years right now, because I've been trading for 5 years right now. And the first few years, I just was fucking around, basically, trying all the different things. But I think around the last 2.5 years, I've been trading this strategy and really developing it. And I know it inside out. I know how it performs. I know I'm on a hot streak right now. And I know things will get worse. And I'm totally prepared for it. So this was just a trade I took that I wanted to go over. In terms of the target, it lined up perfectly with this swing low. And that's usually the best trade for me. So I want to see my mechanical setup. I want to see a certain pattern, like the distribution pattern that increases my win rate. And this was a redistribution range. But if my statistical target lines up with a key point on a chart, my win rate also tends to increase because of the confluence between my statistics and market structure. So that might be something for you. You want to test as well. If you have a static target, what happens if it lines up with a key level in the markets? What are certain connections between your winning trades? When can you risk more without increasing your drawdown? So that's something to think about, guys. Hope you enjoyed this video. And if you have any suggestions for future videos, please let me know. And if you enjoyed that bit of insight in my journal and you want to see more about it, also let me know down in the comments. And then I will make more videos about it. So thanks for watching and see you in the next session.